Okay, so I have liked the idea of assisted living, of senior housing for a long time. A couple of reasons. First of all, the economic side, right? And so I knew that there was good rents. I knew that there was a high amount of demand coming, not necessarily here, but coming because of the baby boomer, the silver tsunami, whatever you want to call it. So I knew that the fundamentals were there. So on the economic side, that was a big reason. On the social side, seniors need a great place to live. And there's a lot of abuse that is happening in the industry. And that bothers, I think, most people. Hopefully, it bothers anybody who hears about the abuse. So, on the social side, it's, hey, we can make a good impact, right? So, not only can we make a good impact by having great properties and good care for the residents, but we can economically benefit for it.
Welcome to the Ral Room Assisted Living Podcast with your hosts, Charlie Cameron and Alex Schlow. This is your go-to show for cutting-edge insights from industry leaders in residential assisted living.
Whether you're ready to launch your own assisted living business or looking to invest in this fast-growing, high-impact sector, we are here to equip you with the tools, strategies, and confidence you need to succeed. Get ready to ride the silver tsunami and change the future of senior care. Now on to today's show.
Welcome back to today's episode of the Ral Room Assisted Living Podcast. I'm your host, Charlie Cameron, and today we are thrilled to have Todd Dexheimer joining us today. Todd has quite an extensive background. He has scaled to an incredible portfolio in multifamily and assisted living. So we're really excited to have him on the show today. Todd, if you wouldn't mind just giving us kind of a quick introduction and tell us where you are right now before we jump back to how your journey started.
Sure. On the business side, I started in real estate in 2008. So a very interesting time. The world was crashing and everything was on fire and nobody wanted to buy any real estate. And everybody that I talked to was like, you're crazy, you're stupid, don't do it. Yeah, you'll lose everything. But I was a teacher, a high school teacher, teaching shop class, and real estate just spoke to me. I don't know exactly why, but it just spoke to me. And so I started buying in 2008, buying like fix and flip single family homes, buying homes for rent. My big dream was to own apartment buildings. And so eventually I started buying apartment buildings and then also buying assisted living too. So we can get into kind of how that came, but that's where we're based in Minnesota. So we own our assisted living businesses in both Minnesota and Wisconsin.
Okay, so let's back up a bit because you were a high school teacher, and the last time I checked, they don't make a lot of money. I was in the military, so I'm speaking a little bit from experience here.
Yeah.
But tell me how you kind of got the money to do your first few deals. And then what did it look like? How long did it take you to go from full-time shop teacher to full-time real estate investor?
Yeah, great question. So yeah, I mean, when I quit teaching in 2010, I was making $32,000 a year. $32,000, not $320,000, $32,000, not much. And I mean, yeah, so I got started by just like my wife and I are super frugal. We had a little bit of money, and my wife, bless her heart, was allowed me to use basically all of our money to buy real estate. And so we bought a house that we lived in that we fixed up. It was a foreclosure. And so we got that house and got like what is it called? A 203K.
Oh, yeah.
Yeah.
FHA 203K. Or...
Yeah. You got it right there. So we got that loan. Then we bought a rental property and again, used every last penny that we had to buy that rental property. And then we also bought a flip, and the flip, we actually used somebody else's money and they were our investor in that flip. So bought 3 houses pretty much at the same time, all within a month of each other. And that was like both feet in, let's go. And so we did those. The flip was kind of a flop, made like $1,000 on it, worked an incredible amount of hours. So I made like $1.50 an hour. and my wife and I both put a lot of time into it, and she put more energy into it because she was dealing with my stress. But the rental in our house was great. Those worked out really well. We were able to refinance that rental even during that nasty recession time. We were able to refinance and then continue to buy rentals. And then in 2010, I quit my job and went full time. It was a great moment, although a little nerve wracking. But we looked at the financials and said, "Look, we're making." At that time, we had 5 rentals. So we had a duplex and 4 single family home rentals at that time. And they were making about $32,000 a year. So that was my income that I was making teaching. However, they were making $32,000 a year and I was paying $0 in taxes on them. So not only was I making as much, but I wasn't paying taxes. And so it just made a lot of sense. And then we were doing a couple flips here and there at the time.
That's awesome. That's awesome. So the trigger was, okay, I'm making just as much as I am from teaching. So might as well just go do this full time. I had a very similar experience from real estate. And once one surpassed the other, it was like, okay, I think it's time to go try this other thing out.
Yep. And teaching was all right, but I didn't like the lack of control and the politics behind it. So I had things I wanted to do in my own classroom and I was never allowed to do it. And so that's what I always had to follow the rules. And I'm just not somebody who likes to follow the rules. And so teaching just wasn't a fit for me.
What's interesting is a lot of people have a hard time taking that leap of faith, but it's important to remember that your worst case is going back to wherever you just were or wherever you are today.
Yeah, and that's exactly what I said. I'm like, look, I can always go back to teach.
Yeah.
I can do construction. Like I got plenty of skills. Like I'm not worried about it.
Yeah. But if you hadn't taken that leap, you wouldn't have now owned over 500 million in multifamily and raised over 100 million in private capital, right?
Yeah.
You'd still be making 32 grand a year teaching shop.
I'd be up till 50 now.
Oh, okay. You know? Okay. My bad. Yeah. Oh, so you might as well stayed.
Yeah.
Okay. So you did the first few rentals, you got to 32,000. And I just think this journey is so interesting that I really kind of want to explore it further. So you got your 5 rental properties, one's a duplex, and your goal at the time was to get into multifamilies. Tell me about that first big multifamily you got into and how you did that.
Yeah, I mean, it was quite a while, right? Because I started, so I ran out of money. I didn't run out of money. I ran out of the ability to get more rentals because at the time you could only get 4 in your personal name, right? Everything crashed and they were super restrictive. And so you could only get 4 in your personal name. So I couldn't get any more. I partnered with a buddy. He ended up buying a couple. And so we partnered and split some of the profits. And then I was like, I can't figure out how to get any more. And so I started flipping houses again. I only did that one flip that like made me nothing. And I was like, flipping sucks. I'll never do that again. Then I'm like, I can't buy any more properties. So I'm going to start flipping again. So that's what I did. I started flipping houses. And then I figured out how to get some loans with local banks using construction finance or using commercial finance. Sorry. And so I ended up like, it wasn't a science, but it was basically I would do about 3 flips and then keep 1. And so built my rental portfolio doing that. But the first big, and I wouldn't even call it big, but the first like apartment was a 13-unit apartment building that was a short sale in St. Paul. And the thing was a piece of crap, really, honestly, in a bad neighborhood, and bought it and fixed it up and had a crazy amount of problems and ended up still making some money on it. But the flipping business was very lucrative. We did really well. We flipped a lot of houses on it in the business. And so that was like the bread and butter of what I was doing. And it was easy. It became easy, right? You got a system down, you're doing it. And we're going to keep on going on buying these single families. But there was a point in time where I'm like, I can't keep doing this. This is not where I want to go. And if I keep doing this, it's just going to drive me nuts. I'm going to burn out. So I stopped flipping houses or really slowed down. I was doing like 1 at a time versus 7, 8 at a time. I was doing like 1. I ended up doing like 4. What was that? 2015. I ended up doing 4 or 5 that year. The year before I'd done like 30, 40 of them. And I said, what I really did is I looked at the portfolio and I said, what's making me money? Is it the flipping business or is it the rental business? What's making me the better returns? And it was really the rental business was making me better returns. The flipping would make me cash, but I got to pay taxes on the cash. And I got to do it again. And it's like the rental business is repetitive. They pay me every single month. And then I'm watching the equity go up. It's not true cash value, or it's not cash in my pocket, but I'm watching the equity go up. And like the returns in these rentals are actually better. So that's what I want to do. And so that was 2015. So that's when I really started buying apartment buildings. I said, I can't keep buying these single families. Like it's going to take me forever to get my goals. So I got to buy apartments. 2015, I started buying smaller buildings again, like 10 to 20 unit buildings, and then eventually transitioned in 16 to buying 100 plus unit buildings.
Okay. So you made the realization, and a lot of folks start in flipping. So it makes a ton of
Yeah.
sense. Then they do a couple
It's
first.
easy
and
way
then
to
they're
get
like,
into it.
oh, wait a minute. If I keep the rental, then I pay way less taxes. I start making more money in multiple ways, not just cash
Yeah.
flow. It's something a lot of people don't realize. It's something I didn't know till my late 20s, all the different opportunities that real estate gives you. There's multiple profit centers. When you're talking about stocks, of course, we're just hoping for appreciation. Maybe we get a little quote unquote cash flow through dividends, but that's it, right?
Yeah.
In real estate, you got cash flow, you got amortization, right? Paying down the loan, you got depreciation. Uncle Sam lets you write off the structure. You got appreciation. So you're kind of countering inflation because your home also appreciates the same amount, usually, roughly, the same amount as inflation's happening.
Yep.
You got leverage, right? So you can put less money down. You got to have all the dollars to buy the stock. You can put less money down and get a bank to do 80%. You can value add, force the appreciation of the property. That's basically what flipping is, but you can do it at scale for multifamily.
Yep.
And then the last big benefit is you can control the outcome, unlike stock. So there's 7 key benefits in my mind of real estate that you just can't get anywhere else, which I think is mind-boggling.
Couldn't agree more.
Okay, so currently you're at how many multifamily?
Boy, I'd have to look. I don't know. We 3,000 units like we own currently today, probably.
Okay.
Maybe a little bit more, somewhere around there.
And you did most of that with other people's money, right? Private capital?
Yeah, so we syndicate all the multifamily. So almost every deal is a syndication. So meaning like just raising from, and it's all friends and family money, friends, family, acquaintances, people that reach out, referrals, whatever. But it's not like big equity firms or family offices or things like that. And so, yeah, we put those deals together. And actually, even some of our assisted living is that as well.
Okay. And so you raise most of your capital just from your own network.
Yep.
They're on your list and you just reach out whenever you need it?
Yeah, absolutely. We have a deal and say, hey, here's the deal. Here's a pro forma. Here's what we're looking to do. Do you want to share in the profits?
Okay. So let's transition to assisted living. So you're doing all this multifamily. What made you in 2020 want to purchase a couple of 12-bed assisted living homes?
Okay. So I have liked the idea of assisted living, of senior housing for a long time. A couple of reasons. First of all, the economic side, right? And so I knew that there was good rents. I knew that there was a high amount of demand coming, not necessarily here, but coming because of the baby boomer, the silver tsunami, whatever you want to call it. So I knew that the fundamentals were there. So on the economic side, that was a big reason. On the social side, seniors need a great place to live. And there's a lot of abuse that has happened in the industry. And that bothers, I think, most people. Hopefully it bothers anybody who hears about the abuse. So on the social side, it's, hey, we can make a good impact, right? So not only can we make a good impact by having great properties and good care for the residents, but we can economically benefit for it. Okay. I'm not going to get into assisted living because it's just not the niche for me. I don't know enough about it. I had a partner, or my business partner currently, we weren't partners before. And he's, hey, you got to look at these deals. And I'm like, sure, whatever. I kind of pushed him to the side. I didn't look at him. Calls me, hey, have you looked at them? No, I haven't. I'll get to them. Calls me again. Have you looked at these? No, I'll get to them. I've been busy. Calls me again. Dude, you got to look at these deals. I'm like, fine, I'll look at them. So I finally look at them and wow, financially, these make a lot of sense. So we had a couple conversations, just talked about the impact we could make, how financially we could do, what we could do with these buildings and all that. And finally, Andy said, let's give it a shot. Let's give it a shot. I ignored him for probably 2 months. Let's give it a shot, see what happens. So we bought those 2 buildings. It went really well. I loved kind of what we were all about and trying to achieve. Of course, the money was really good coming in. And so I said, let's go. Let's continue to buy. So then those were 2. That was 2020. Of course, COVID was the 5-letter swear word. That wasn't great, but it wasn't stopping us. And so we bought 4 properties was our next kind of transaction. And that was One was there's 3 different sellers in this, but we kind of bought them all at the same time because they were in a medium-sized town in Minnesota. We bought one that was distressed, very distressed building. I think there was 16 out of 30 beds occupied. It was being run like just stupid. The people that owned it owned big, massive buildings, and they were running it like an institution. Super poor care, bad employee. I mean, just everything was bad about it. This terrible employee interaction. You could just tell it was just bad. So we were like, okay, great opportunity. We bought it for next to nothing. And then we bought another one that was being run really well, very well occupied. I think it might have been 100% occupied. Great people, great owners, and still to this day, great people, great owners, right? We thought good staff, like this will work perfect because it's just down the road from this disaster. And then we bought another one that was very similar. Great owners, at least we thought great owners. Turned out they were pretty bad. Well occupied, all that kind of stuff. So we bought these kind of as a package and thought that would really help transform this down and out property. Didn't work quite like that. I don't know why actually I bought more after that, because that was a really stressful transaction and it didn't work the way we wanted, but I continued to buy a lot more properties, more portfolios, and continue to grow. I'm glad I did now in hindsight, but at the time it was like, why did we do this? We could dig into some of those headaches if you want.
Yeah. So tell me what the biggest difficulties were with it. Did it just not pan out where you thought you'd be able to kind of pull some of the staff and oversight from a couple of homes to that underperforming one, or what happened there?
So let me start out by saying, if you're going to get into assisted living, understand it's a business. Like you're running a business. Now, every real estate's a business. I'm a firm believer in that. A lot of people think real estate's investing. Real estate's a business. You're operating a business. Just different business models for different pieces of real estate. So a fix and flip is a business. You're running a construction company, essentially. Single family rentals is still a business, right? You have to manage the properties properly. You have to have somebody that does it, right? And you're still dealing with tenants and the repairs and maintenance and all that kind of stuff. So it's still a business. You have to run it like a business. Assisted living is a business. It's a very hands-on business. When I look at our expenses, the vast majority of our expenses are in staffing, right? Staffing is a massive amount of our expenses. So when I look at the margin in multifamily is about 50%, roughly 50%. No, assisted living, you're like 20%, right? A lot different margin because your expenses are so much higher. Your income's higher. People, that's what people get stuck. They start to look at it. They look at, wow, look at how much I'm getting per unit, per resident in rent. Oh, I'm going to be rich off of this. No, wait a second. Now you forget that you have expenses too. And it's not single family home expenses. I have to hire people to actually take care of these people. So I think that's the biggest thing is like, when we bought this property, not that we didn't realize there was these expenses there, but we didn't realize how important excellent staff was. And that is the most critical thing to operating these properties properly, is you have to have excellent staff. And how do you create excellent staff? You have to have an excellent environment for them to be in. And you have to have a really strong culture. And that's what we didn't have. We had a culture of really nothing. Like we had ideas as owners, like we want this to be an excellent place to live. We want to make sure our residents are taken care of. But we had nothing concrete that really talked to our staff and our residents to say, this is actually who we are. It's not that we want it. It's a non-negotiable now. It's a totally different mindset today in our culture. And when you look at who we are as a company, we are a different company today than we were when we first began. So that was the difficulty, is honestly, it was that we were two dudes just thinking it was going to be too easy. I think just thinking, of course we can do this. It's easy, right? We just got to get a couple of good people. They'll run these buildings. It'll be magical. And then we realized, look, that's not how it goes. We have to create this amazing culture, and we're going to have to work really hard at doing that. And we have to get the best of the best in order to do that. And so now it's just a non-negotiable anymore. If you don't fit our culture, I'm sorry, but you're fired. It's just how it is. You're going to have to move to a different place. And by the way, we don't really fire people because we don't have to, because they don't fit our culture. So they go somewhere else really quickly and they realize it. Usually we don't even have to fire people. It's just that they're like, this isn't for me. I actually have to show up to work. I actually have to take care of people. Like I actually have to do things. I have expectations. Like this isn't for me. And it's crazy that there's people out there that are like that, but there's a lot of people that out there that don't, that get a job. They want the job just so they can sit on their phone and not have to work. And we just don't tolerate that anymore.
Wow. Okay. I definitely want to dig into this, but you make a really good point that just kind of occurred to me as you're talking about it. Like if you're flipping houses, you're owning multifamily, normally everyone that quote unquote works for you is a contractor or a property manager. They don't directly report to you, right? They're not usually integrated as part of your company. So arguably you could basically build this portfolio and build this real estate machine without having a culture. But when you're talking about assisted living, where you have to hire and maintain a full-time staff, and they're the key to running a successful business, it's a totally different animal. And so it just emphasizes how important it is to have that culture. So what is it that you do as you're interviewing folks to kind of ensure that they align?
Yeah, so we have a pretty extensive interview process, and my business partner's more in charge of that, so he could speak to exactly the nuances of it. But basically what they do is when somebody wants to apply, they have to, they go through a kind of a pre-screening process that is asking them who they are and all the kind of the typical interview questions, right? So they have to take the time to go through that. Then from there, they do a video interview. Okay. So the first interview is a video interview. So again, part of this, by the way, is just taking time away from their schedule to make sure they're serious. Okay. So part of not a lot of it, some of it's not even that we care about the answers. I mean, certainly we do, but do they take the time out of their day to actually do this interview? Because if you're not willing to give me the time, that means you're not very serious, but you're still going to take the job if I'm willing to give it to you. And then I just don't know who I have. So part of it's this process. So we get this video interview. They do that. Then they do a DISC assessment. We want to know who they are as a person. Okay. So again, more time, but then that tells us about them. We know who we need to hire.
Hey there, sorry to interrupt this episode, but I've got a question for you. Do you want to share in the wealth and incredible returns from the highest demand asset class in real estate without the hassle of doing it all yourself, or at least not yet? Residential assisted living is booming and it's only gaining momentum. That's why we created an investment fund at Open Range Capital, so you can benefit without the heavy lifting. With the silver tsunami upon us, demand for assisted living is far outpacing supply, making this the can't miss opportunity for the next few decades. We provide access to fully vetted investment opportunities that are primed for success and ready to deliver strong passive returns. Don't wait, ride the wave with us. Visit theralroom.com/invest to partner with us on future investment opportunities. Again, that's theralroom.com/invest. We look forward to connecting with you. Now back to the episode.
Like most of our good people are fairly high on the S, and they're caring people. They're emotionally driven people. They want to serve. If we don't have a high S, it's likely not going to be a good fit. Okay.
Interesting.
So we do that. That's before a real interview truly happens. And so then finally, we're going to get to that interview process and referral process and all that kind of stuff. Just your more traditional interview. The key is to weed out the people that aren't serious. It's really easy to get a job it's really easy to give somebody a job if you're just going to do it quick and interview. And we want to make sure they fit our culture. And by the way, when in our interview, we're also asking them questions about how they would respond in certain situations, how they feel about certain things. We're talking about our culture. We're talking about our attributes. We're talking about what we believe in. And we want to make sure they believe in those same things. Another thing we really try to find out is where they came from. And we want to understand what that culture is there and then why they're no longer there. First of all, how long were you there? Why are you leaving there? So if you came from a place that has a terrible culture and accepts mediocrity or worse, and you stuck around for 5 years, you're not a fit for us. If you worked there for 6 months and you're like, that place was terrible, they were lazy, they didn't care for the residents, blah, blah, blah. Okay, you might be a good fit because you didn't tolerate mediocrity for 5 years. So that's a big one. Was like, where'd you come from? Why did you quit?
Interesting. So when you say you established a culture, did you write anything down on paper, or is it more of just the feeling and building out the right staff and personalities?
Yeah. So our kind of overarching belief system is that we are here to add life to the years of our residents. We're not trying to get them to live longer. Certainly that's a goal, right? But that's not the main goal. We want to add life to the years of our residents and our staff. So that's kind of the overarching. We want to do that. Then we have 7 attributes, and those are non-negotiables. And we talk about those all the time. And so my business partner is really big on the 7 attributes, and every single, meeting that we have, he's talking about the 7 attributes. And we are focusing, like, there's going to be an attribute that we're focusing on that week and making sure. So like extreme accountability, right? We want to make sure you're holding yourself accountable, and then everybody holds themselves accountable. So that's one of, it's a non-negotiable. Like, if something happened, we have to own that. And everybody in our company has to own it, including us, including myself and my business partner. Like, we have to own whatever happened. And we have to figure out then, and another attribute is the resourcefulness. Like, we have to figure out how can we be resourceful in order to fix whatever problem we have, or maybe it's not even a problem, but like, how can we be resourceful to continue to get better? So I always want to be resourceful. We always want to have ownership. And so we got these 7 attributes that we continue to push on our staff. And if you're not hitting those 7 attributes, you're not a fit. If one of them doesn't align with you, you're not a fit. That's just how it is.
That's awesome. Love hearing all about how you implement a culture, how that sort of fixed things for your initial few homes. So let's talk about scale for a minute. How were you able to go from 2 to 5 to 376 beds? It sounds crazy when you say it out loud, but you were able to achieve it in just a less than 5-year time frame.
Yeah.
So what did that look like, and what did you learn from that?
Yeah, we did it in 3 years. There's a couple things that I'm able to do it because of my background in real estate, raising capital, all of that. We were able to do it also because we didn't bring it all in house. So that's why we were able to do it that quickly. So we brought the Minnesota properties in house. We have the 4 that I said we purchased, the 2 we originally purchased, and we purchased 1 more. Then we bought a portfolio of properties in Wisconsin, and I syndicated that deal. And we bought another portfolio in Wisconsin, did the same thing, syndicated those deals. So we were able to buy them quickly because we syndicated them. So raised money from our investor network. And because on the Wisconsin portfolios, we hired a third-party property management company. Now, let's talk about the mistakes. That was a mistake. Okay. I would not suggest somebody go quite so fast. Make sure you have an established culture. Make sure you understand how to operate these buildings, because they are difficult to operate. Okay. They're profitable if you're done right. They're very not profitable. Like, they can suck a lot of money from you if you don't do them right. If you have a terrible culture, if you just don't know how to run them, just don't have the right people in place, whatever it might be. I highly suggest everybody runs their own properties. You don't have to. If you find a really good company that has a really good culture that matches with yours, you can get away with not running your own properties. But I think it's really tough to find those companies. It is, in my opinion. And so I think if you can run them in-house, that's the best. Personal opinion. Again, like I said, You could have an excellent property management company and that could work. Or you could do a triple net lease, or there's other ways to do it. So
Sure.
you don't have to own them yourself. But anyways, how we are doing it and so if I were to do this again, first of all, I would have bought the Minnesota properties like I did, and I would have spent a lot more time and effort up front to make sure our culture was really good, to make sure our company was running very smoothly before I bought the next set of buildings. And I would have made sure we were set up strong to be successful in the beginning. We hired a poor operator that did a very bad job in Wisconsin. We fired them, hired another operator that did a better job, but again, just didn't have the right culture that we were looking for. They weren't running it the way we would have expected to run these buildings. And so we've taken over everything. Now we're getting the results we want, and it's enjoyable, and financially it's enjoyable as well, right? Especially the first property management company, I mean, it was not financially rewarding at all. And the culture was horrible. It was terrible. And this is not why we got into this business. We can't control what's happening here. We have to move on from them, and we have to start controlling it. And the second one that we fired was like, okay, like we talked about controlling it, and we just gave control to somebody else. Like we have to bring it in-house. So it's been a long journey. Scaling, go back to your original question, like how did you scale? Look, I think it's very possible for anybody to scale. I think you just got to, if you're in this business, you got to do it right. You got to we went too fast. We just did. We went too fast. But buying portfolios is a great way to scale. But here's the deal. If you're going to buy a portfolio, either buy a very well operated portfolio and know that you have operations intact, or keep that owner as an operator if that's possible. But buy portfolios. That's a great way to scale. The other way is to buy, of course, individual buildings, or build individual buildings, but that's going to take you longer, and it should. You've got to make sure each one is running properly.
Wow. That's a lot of lessons learned.
I could keep going.
Yeah, I know. Yeah. I feel you getting burned along the way. So currently, just to be clear, you do not employ any management companies. You all are in-house management, right?
So we have a small portfolio of 2 buildings that's quite a ways away from our current buildings that we currently have a third-party company operating. We'll see. It's going well. We feel like they've got the right culture in place to continue with them. But if we feel there's cracks there, we will take that over as well.
Okay. So let's talk about occupancy, because that's always a big question. And you've got 376 beds.
Mm-hmm.
So what are the keys to success in your mind on keeping your homes full and sourcing residents and having a wait list and all of that?
Yeah. The biggest key is reputation. You have to have a reputation of excellence. You have to have a reputation that you are caring for residents and not abusing residents. So that is key. You need an excellent reputation. Where we have wait lists, so our wait lists are in our Minnesota properties that we bought first and that we've implemented in-house and built our culture. Or we have wait lists at every one of those properties because we have an amazing reputation. We have people mad because we don't have room for them. But they don't have another place to go. And they're like, you need to have a bed for us. We don't have a bed for you. We're sorry, but we don't have room. So that's number one, create an amazing culture. And that's so far ahead of everything else. It's almost not worth mentioning anything else. That's the key. But of course, get out there in the community. Look, where are your residents hanging out? Where are your residents' kids hanging out? So those are your 2 sources of residents, are their kids and them. So where are they hanging out? The local churches, they're going to the local cafe. Depends on how big your city is too, right? We're mostly mid to small size towns. So they're going to hang out at the local cafe where they've got the placemat with all the names on it. My wife grew up in a small town. She's like, go to the local cafe, put our advertisement on the placemat there. Like all these older people are gathering there and they're like, oh, what's VitaCare Living? So get in front of the people where they're at. We do some social, but like media, but That's not where our residents are. A little bit where the kids are at, but you got to get into the local community. Do things in the local community. Be a presence in the local community. Bring your residents out in a local community. Talk about a win. Like, the residents get out of the house, they get to do some fun things, and the community gets to see them. And there's like perfect advertising right there. You also have to decide, are you doing private pay only? Or are you doing a mix of public and private? Or are you doing public only? And so you have to decide where that is. We do a mix of both public and private. And so when we work with the public, it's really working with the caseworkers, working with those institutions to make sure that you're in front of them. You're always constantly saying, hey, we have rooms available, being a really good reputation with them, of course. And so you got to, if you're a private community, of course, that's a little different as we advertise private. That's our advertising, right? You got to get out there. You got to advertise. You don't have to advertise with the public pay. You have to advertise with the private pay. The public pay, you just got to get to know the caseworkers, get to know the hospitals, get to know the clinics. That's your advertising there.
What's the reason for having both? What in your mind?
Necessity, honestly. We are in communities where we could not fill 100% private. It'd be very tough to fill 100% private. And so we utilize public as well. In Minnesota, the rates are essentially the same.
Okay.
And so that doesn't, quite frankly, it makes a lot of sense. In Wisconsin, the rates are quite a bit different. Private is a lot more expensive than public, but in Minnesota, the rates are pretty much the same.
Okay.
Yeah. Here's the deal too, by the way. What I would tell everybody, if you're going 100% private, that's great today, but understand your building is going to get older. And as your building gets older, private doesn't want you as much. Make sure you understand the rate difference between private and public as it stands today. We can't predict the future. Make sure you understand the rate difference between private and public, and understand that you may have to start accepting more public as your building ages. And just think about that. And how does this building work today? If you're 100% private, that's great, potentially. But what does it look like in 10 years, 5 years from now? You're probably not going to be 100% private.
No, that's a great point. You're not the newest, shiniest building on the block anymore.
Right.
There's always going to be something newer as time marches on. Let's talk about raising money for just a minute, and then we'll start to wrap things up. You've raised a lot of money, a lot more than we have, but we've done it on deal-to-deal basis and syndication, smaller syndication. We find a lot of our assisted living mastermind members are afraid of it. And so we work really hard to kind of help them break those barriers down and understand that it's just simply a limiting belief, and that you can offer an opportunity to people that they normally wouldn't have, and it's a mutual win. What advice would you give to folks that are, hey, the only way I could do this is to raise money, but I'm not sure what to do, or I'm hesitant to do that?
There's a couple things. First of all, if you're hesitant to do it, why are you hesitant to do it? I guess is the question. Is it because you don't want to ask people you're providing an opportunity to people? You just said it right there. You're providing an opportunity to people. Like, you should not be hesitant to provide an opportunity to people to make money. Think about this way. What if you did this assisted living business and your buddy Jim begged you to invest? And finally you said, okay. He puts in $500,000, but you don't tell anybody else other than your buddy Jim, because you don't want to raise money. And Jim's got $500,000 in it, and all of a sudden he's talking to his buddies, which are your buddies, about this deal that he invested in, and he's making a 12% cash on cash return, and he got all his money back in a refinance, and man, what a great deal this is. And they're like, why wasn't I told about this? You're holding back an opportunity from your friends, from your family, from your acquaintances. Like, just understand you're not asking for money. Never ask for money. That's not what you're doing. You're not asking for money. You're providing an investment opportunity for them to get involved in, and something that can make them really good returns. So I think that's the biggest thing, is a lot of people are afraid to ask. You're not asking. Don't ask. You should be afraid to ask, right? Because if you're asking for money, that means you're begging for money. That means you shouldn't be getting that money. If you're providing them an opportunity to invest in a cash flowing asset with excellent future potential returns, That's a totally different story. So I think that's number one. Number two is, I don't know, raising money might not be right for you. You have to determine, like, are you able to sell? Because I just got done you saying you don't have to, you're not asking, but you still have to sell, right? You still have to promote yourself. You still have to be out there. You still have to get in front of people. You still have to be confident. So you have to have those types of things. So you have to be willing and able to get in front of people. You have to be willing and able to, you have to be able to be confident in what you're offering and passionate about what you're offering, and present it in a way that's not, of course, slimy and awkward. So that's important. I think the people that are good at capital raising are just good at communicating, just getting good at getting things out there. If you're thinking about capital raising, what I would suggest is take your friends and family and acquaintance list, create a list of all these people, put them on an email database, and then start setting up like a newsletter, monthly newsletter, weekly newsletter, whatever you want to do. Don't do it daily. That's too much, especially to start off with, but do a weekly, monthly newsletter and start talking about assisted living. Start talking about what you're doing, why it's valuable, why you're passionate about it. Write articles about it. Just send articles. I send out a monthly newsletter. If anybody wants to subscribe to it, I'm happy for them to do that. But what I do is I talk a little bit about what's going on personally and in the business. Then I have links to either articles that I wrote or other people wrote about what's going on in the industries that I'm in. And then I have some book recommendations that I give and podcast recommendations. And that's it. It's a simple newsletter. It takes me very little time to write, and it gets in front of people. What's that do? It gets people knowing that you are doing this business, and it's an easy way for you to communicate to them and get them interested. So that way, when you do say, hey, I've got this opportunity, they're like, dude, I've been waiting for you to ask me. And you'll get that, like, if you do it.
Yeah.
There's a lot more, but it's not that, it's not that hard it's a hard business, but it's not that hard to raise money. It is, but it isn't. There's people that are willing and able and ready, and they want to invest with you. They just don't know it yet.
Yeah. Or they don't know that you have an opportunity. Like to your last point, that's a lot of what folks are saying. How do I do it? I was like, have you said anything anywhere to anyone about what you're doing? No. Yeah. Okay. You have to get out there and start just talking about what you're working on. That's it. That's all you got to do. You don't have to tell people or say, I need your money. Like you said, that's also not the way to go about it. Just talk about what you're doing. Be passionate about what you're doing. People will randomly reach out. As soon as you start talking about, hey, I'm looking to provide an opportunity to friends and family to be a part of this as well. People you never expected will reach out from years ago and go, wow, this is really cool. I've been watching what you're doing, every single one of your videos or comments, and I'd really love to get involved. How can I invest? It's really that simple, but most people just put it on this crazy pedestal. Like you said, it's framing it as the opportunity. Go back and listen to the beginning of this episode where we mentioned all 7 benefits of real estate. Most people never get the opportunity to do that, or they're working in day jobs. They don't have the extra time to go do that themselves. Investing with you may be one of the best return opportunities they get ever. Right? So we see it all the time because we have a bunch of real estate friends and entrepreneur friends, but most people don't have someone like you in their network.
Yep.
Right. So they just see you as the real estate guy or the assisted living gal in their network. And you can be that person to provide those opportunities to folks. Yeah.
But by the way, in our assisted living business, our largest investors are the property owners that we bought from. So
interesting.
They have invested back into the business. We've got a couple that are seller carrybacks, so I would call that an investment, but a little bit different. We've put several of them as investors, like equity investors in the company. And so they are getting distributions and they have equity. So when we sell eventually in the future, they'll have equity and they'll be able to make profit. They'll get their money back.
We go set that up in a way with the sale.
Yeah. So you can set it up through a 721 exchange if you want, or they can take their cat. So when we were doing it, the last building we bought was in, 2023? Bonus depreciation was still really high. So you can do it at 721 exchange, but you can also do where they just get bonus depreciation, cost segregation. So they're getting the last one we did, that seller reinvested $800,000 back into the deal. He got K1 at the end of the year that showed a $800,000 loss because of the tax benefits of real estate. So he just wrote that off.
That's awesome. Man. Okay. So that's something I just learned that I didn't really realize is you could have the seller invest in your deal. Of course, carry back. I'm familiar with that, right? With the seller
Yeah.
kind of
So
financing part of the purchase, but
yeah. So the
investing
problem
it.
with the carryback though is it oftentimes, depending on the lender, but oftentimes it affects your net proceeds from the lender. So if I'm gonna get a carryback, but it's gonna affect my net proceeds from the lender, it might not be a great deal. Like, why would I do that? Doesn't make sense. The lender's still saying I got to put 20% or 25% of my own cash into the deal.
Mm-hmm.
So if we do that where they become an investor, it's kind of like a carryback, but it doesn't affect the net proceeds.
Yeah, you could bring less to the table. Interesting. Okay, let's end with just a trends question. Before we get into how people can reach out to you, of course, what's the biggest trends you see happening in the assisted living sector right now? Like, where do you see it evolving over the next few years?
Yeah, I mean, there's the obvious one. Baby boomers are getting older. They're just kind of starting to get into assisted living. Not even really, right? You got some of the unhealthier ones, maybe, or the ones that aged maybe a little faster that are getting into it. Because the average age coming into assisted living is just over 80 years old. The oldest baby boomers are in their upper 70s right now. So that's the trend. They're starting to come into assisted living. You're going to really start to see them over the next several years really start to pile up. And then that's going to explode. So that's for sure one of the trends. The other trend, so the trend we're seeing that the assisted living buildings that are being built right now. So that's how we haven't built anything. We may, but we haven't built anything. But when we're buying an existing property, we're really looking at the quality of the property and how it's set up compared to what new construction is right now today. The new construction today is just much superior to the typical 2000s build. So our buildings, by the way, just so people know how big our buildings are, most of our buildings are between, I think our biggest building, so not what I think, our biggest building is 30 beds. Our smallest building is 10 beds. Okay. So most of our buildings are in that 10 to 20 bed range. So these are most of them are purpose built, but what the new purpose built is they've got some extra amenities. Most of them have a little bit bigger bedrooms, full bathroom for sure, and even a kitchen or a kitchenette at least, fridge and maybe a microwave, cooktop, something like that. They've got really nice community spaces. They might have a fitness center. They have some activities areas. They got better amenities. They've got some outdoor space that's nice. And so when you look at the buildings you're going to buy, you have to look at the demand in the market, and you have to look at what the existing kind of portfolio of properties in and around your area is, and make sure you're not obsolete. Okay. So I think that's a big thing. People got to start, you have to start. It's not just an assisted living building. This is somebody's home, and baby boomers, bless their hearts, are way more picky than the silent generation, which is a generation that's currently in there. Baby boomers are going to be much more picky. They're not going to deal with some of the stuff that the silent generation said, yeah, whatever, we're fine with it.
That's a huge point. I mean, there's a cultural shift in generations that's about to happen.
In big time, not just.
Oh yeah.
Yeah.
So different homes are going to suffer, and some are going to really excel. So it's going to be an interesting transition.
Yep.
So Todd, I know you also are a host of a podcast, Pillars of Wealth Creation, and that you're passionate about teaching others on how to create businesses and take control of their finances. Anything else that you're working on right now that you're passionate about? You want to tell us about?
I'm of course passionate about growing my business. Always. So we're always looking for new assisted living. We've got a couple opportunities we're looking at right now, hoping to grow that a little bit. And we are looking at potentially building in a market we've been really strong and really successful in. And as far as the multifamily too, I still operate on that side. So we've got a really cool purchase that we're purchasing now, and purchased a couple really great buildings in 2024, late 2024. So those are the kind of maybe exciting things that are going on right now. And then as far as being passionate about giving back, I mean, one of the things that I try to give back to our church a lot and other things in the community.
We thank you for giving us your time today, because this has been an incredible episode. If our listeners want to reach out to you or connect with you or invest with you, what's the best way to do that?
Yeah, the best email is probably todd@enduruscapital.com. So it's ENDURUS capital.com. If you want to check out VitaCare Living, it's VitaCareLiving.com. You can reach out to me. Probably the best place is like LinkedIn or Facebook, but just, I think, send me a private message. Otherwise, I ignore half of them. I'm really bad at social media. I try to be better, but I'm really bad at it. And you mentioned the podcast. I'd love for people to check out the podcast and Pillars of Wealth Creation. It's on whatever channel you're listening. Of course, listen to this one first, and then check out my podcast too.
Awesome. Yeah, I'm sure they'll do that. Todd, thank you so much for joining us today and sharing your insights. It's been a pleasure learning from you.
Yeah, absolutely. Thanks for having me on.
All right. We'll see you next time. Thank you for tuning in to the Rail Room Assisted Living Podcast. We hope you found today's episode insightful. If you enjoyed it, make sure to leave us a raving 5-star review. And a quick review helps more listeners find the show and more seniors get the exceptional care they deserve.
And don't forget to subscribe so you never miss an episode. And just so you know, we have prepared some free resources for you to help you succeed in residential assisted living in addition to this podcast. Head over to theralroom.com, that is theralroom.com, to download our free 10-step guide to launch your first or next residential assisted living home, or our 10 reasons to passively invest in residential assisted living ebooks.
And if you're ready to take the next step and make real moves in the RAL industry, join us in the Rail Room Mastermind. It is an exclusive community where we deep dive into everything you need to launch and grow your own residential assisted living business. You'll get access to recorded courses, live calls with industry experts, a RAL calculator, resources and tools, like-minded entrepreneurs, funding opportunities, and an expert networking community to help you along your journey.
Be sure to join us next time on the Rail Room Podcast as we continue to explore the world of residential assisted living with more great guests. See you then.